Something crazy is happening in the global financial system right now, and most of the crypto market is asleep. Retail got wiped out over the last few months. Comment sections are quiet, charts look boring, and everyone who sold is congratulating themselves for getting out. But while they're celebrating their exit, every single macro liquidity signal on the planet is flashing green simultaneously. And the last time this happened was 2020. Bitcoin went up 1,600% from the low. Global liquidity is rising. The global M2 is surging. US liquidity is expanding to new all-time highs. China, Russia, the EU, India, South Korea are all increasing their money supply, and all of it is hiding behind one of the largest shakeout events in crypto history. This is not financial advice. I am sharing publicly available information for educational purposes. Always do your own research. Before we get into it, drop liquidity in the comments if you've been tracking the M2 expansion. Drop shakeout if you believe the last few months were designed to flush retail before the next leg. Drop show me if you want the data that proves this setup mirrors 2020. Because what I'm about to walk you through is the macro signal that has preceded every single crypto bull run in history, and it's flashing right now. Welcome back. I am the Calm Analyst. Around here, we follow the liquidity, not the headlines. Today, we're breaking down the global M2 expansion, why it's different from the 2022 contraction, how it connects to Bitcoin's bottom signal, why XRP is coiled for a breakout, and what the 2020 playbook looks like when you scale it to today's numbers. Let's get into it. Let me start with the data, because this isn't about feeling bullish. It's about reading the same signals that have preceded every major crypto rally in the last decade. Global liquidity is expanding. The M2 money supply across the world's major economies is surging simultaneously. China is injecting liquidity. Russia is expanding. The EU is increasing money supply. India is growing. South Korea is adding. And in the United States, the M2 is rising rapidly to new all-time highs. Despite everything you've heard about tight monetary policy, the actual money supply is expanding. Now here's why this matters for crypto specifically. Every single bull run in crypto's history has started with liquidity expanding, and every single bull run has ended with liquidity contracting. Go back to 2017. M2 was expanding globally. Crypto exploded. Go back to 2020. Massive M2 expansion from COVID stimulus. Bitcoin went from $4,000 to $69,000. Go back to 2021's top. Liquidity peaked and began contracting. Bitcoin topped out and crashed 77%. The pattern is not complicated. More money in the system means more money chasing returns. Crypto, as the highest beta asset class in existence, captures a disproportionate share of that rotation. When liquidity expands, crypto explodes. When liquidity contracts, crypto crashes. Right now, liquidity is expanding across every major economy simultaneously, and crypto is sitting at oversold levels not seen since the 2022 bear market. If the M2 correlation just clicked for you, if you just realized that the most reliable predictor of crypto bull runs is flashing green right now, smash that like button, because most people are watching price charts while the macro is telling them exactly what comes next. Now let me show you why this setup mirrors 2020, because the parallels are striking. In March 2020, COVID crashed every market on Earth. Stocks collapsed. Crypto collapsed. Bitcoin dropped to $4,000. Fear was at maximum levels. Retail fled. The narrative was that everything was over, and then liquidity flooded the system. Central banks printed. M2 expanded. And from that bottom of fear and maximum pessimism, Bitcoin rallied 1,600%. $4,000 to $69,000. The people who sold at the bottom of the fear missed the entire move. The people who held through the crash and recognized the liquidity signal were positioned for the most explosive rally in crypto history. Right now, we have a remarkably similar setup. A geopolitical shock, the Iran conflict, crashed markets and created maximum fear. Retail fled. Comment sections went quiet. The Fear and Greed Index hit 12 and stayed there for 49 consecutive days. XRP dropped over 64% from its highs. And behind that wall of fear, liquidity is expanding, not moderately, rapidly. Across every major economy, the global M2 is at new highs, and crypto is sitting at oversold RSI levels that match the 2022 bear market bottom. The 2020 playbook is happening again, but on a much larger scale. Because the liquidity expansion this time is broader, involving more economies, and the institutional infrastructure for crypto, ETFs, commodity classification, SWIFT certification, treasury platforms, didn't exist in 2020. It exists now. Comment below. Do you think the 2020 parallels hold? Type 2020 repeat if you see the same setup. Type different if you think this cycle doesn't follow the same pattern. I want to see how this community reads the macro. Now let me connect this to Bitcoin specifically, because Bitcoin is still the tide that lifts all altcoin boats. Bitcoin is trading around $72,000. The key level to watch is $73,000. That's where resistance flips to support. Above that, $78,000 is where the April lows get reclaimed. And above $78,000, the path opens back toward the demand zone in the 80,000s and eventually new highs. On the monthly chart, RSI is at levels that have historically marked bear market bottoms, not intermediate corrections, bear market bottoms. The same RSI zone that preceded the 2020 rally, the same zone that preceded the 2023 recovery. And here's the critical difference between this moment and the 2022 bear market. In 2022, liquidity was contracting, the Fed was hiking, M2 was declining, every macro signal was bearish. The sell-off was driven by fundamental liquidity withdrawal from the system. Right now, the opposite is happening. Liquidity is expanding, M2 is rising. Central banks across the globe are adding money supply. The sell-off in crypto was not driven by liquidity withdrawal. It was driven by a geopolitical shock, fear, uncertainty about a conflict that has a defined endpoint. When the conflict resolves, and it will, because midterm election dynamics create political pressure to resolve it, the fear dissipates, but the liquidity doesn't. The expanded M2 stays in the system, and when fear leaves and liquidity stays, the result is explosive upward price discovery. The biggest misconception right now is that people are comparing this to the 2022 bear market and expecting Bitcoin to go to $30,000. But in 2022, liquidity was contracting. In 2026, liquidity is expanding. Those are opposite macro environments producing opposite outcomes. Every single bull run has started with liquidity expanding. Liquidity is expanding right now. Every single bull run has ended with liquidity drying up. Liquidity is not drying up, it's accelerating. Subscribe right now, hit the bell, drop a clock, because when the geopolitical fear clears and the liquidity expansion hits risk assets, the move happens fast. And Bitcoin's monthly RSI is telling you the starting position for that move is the same zone that preceded every major crypto rally in history. Now let me connect this to XRP, because XRP's chart is telling the same story. XRP is trading around $1.30. On the monthly chart, RSI is at the same levels that marked the 2022 bear market bottom. A floor has been forming around $1.30 to $1.31. The chart is in a downtrend, but the structure is compressing. Lower highs, but the lows are holding. The key resistance to watch is $1.45. Above that, $1.50. Above $1.50, the demand zone from December 2025, around $1.70 to $1.80, becomes the target. A clean break above $1.45 with volume is the first signal that the compression is ending. Bitcoin dominance is at 59%. That's elevated. And every time Bitcoin dominance has hit these levels with RSI at the current highs, a reversal followed. Dominance sold off. Altcoins outperformed. That pattern has repeated consistently. When Bitcoin breaks above $78,000 and starts targeting new highs, dominance will begin its decline. And the rotation from Bitcoin into altcoins is when XRP historically makes its biggest moves. Not during Bitcoin's initial recovery, during the dominance decline that follows. The setup is, liquidity expanding globally creates the macro tailwind. Bitcoin recovers first because dominance is high. Bitcoin breaks through resistance levels. Dominance peaks and begins declining. Capital rotates into altcoins. And XRP, with its institutional infrastructure, regulatory clarity, SWIFT certification, $13 trillion treasury pipeline, and 7 live ETFs, captures a disproportionate share of that rotation. That's not speculation. That's the documented cycle pattern applied to the current macro setup. Now let me address why this shakeout was different, because understanding what just happened is what gives you conviction about what comes next. Most altcoins topped out at the beginning of 2025, not at the end, the beginning. While Bitcoin made new highs, altcoins were already bleeding. By the time the Iran conflict hit and oil surged, altcoins had already been in a bear market for over a year. That means the altcoin correction is further along than most people realize. The selling has been happening for 14 to 16 months for most altcoins. XRP, which peaked at $3.65 in July 2025, has been declining for 9 months. The time-based correction is extensive, and now, liquidity is expanding. The macro signal that starts every bull run is flashing. RSI on the monthly for both Bitcoin and XRP is at bear market bottom levels. Stocks are recovering, closing at 68.24, the highest since March 10th. The geopolitical uncertainty around Iran shows signs of potential resolution, and the Clarity Act markup window just opened with the Senate's return on April 13th. The compression is ending, the shakeout is completing, and the liquidity expansion that's been building behind the fear is about to meet the institutional infrastructure that's been built through it. Let me bring this all together, because the macro picture and the XRP specific picture are telling the same story at the same time. Macro. Global M2 expanding across every major economy. US M2 at new all-time highs. Central banks adding liquidity. Bitcoin monthly RSI at bear market bottom levels. Stocks recovering. The 2020 playbook repeating at larger scale. XRP specific. Commodity classification done. 7 ETFs live with $1.44 billion in inflows. SWIFT certified through Ripple Treasury with $13 trillion in annual volume. 401k rule opening $10.1 trillion in retirement capital. Clarity Act markup targeting April. Goldman Sachs holding $153.8 million. BlackRock using RLUSD as settlement layer. Nasdaq targeting Q3 for tokenized stocks. Monthly RSI at 2022 bear market bottom levels. The macro is providing the tailwind, the infrastructure is providing the destination, and the price is providing the entry point. In 2020, the people who recognized the liquidity signal and held through the COVID crash captured a 1,600% Bitcoin rally. I'm not predicting 1,600% from here, but a 200% move on Bitcoin from current levels puts it at $200,000. And historically, XRP outperforms Bitcoin during the dominance decline phase of bull markets by multiples. Standard Chartered's base case with the Clarity Act is $2.80. Their bull case is $8. Their 2030 target is $28. And those projections were made before the global M2 expansion accelerated to current levels. The craziest part about all of this is that it's happening while most of the market is asleep. Retail is gone, comment sections are quiet, charts are boring, and behind that boring surface, every single macro liquidity signal is flashing green simultaneously. Boring is the setup. Boring is the compression. Boring is what precedes every explosive move. And right now, the macro is screaming that the boring phase is ending. Price is a distraction. Value is the reality. Structure is what matters. And the structure, macro liquidity expansion, meeting institutional infrastructure, meeting oversold RSI at bear market bottom levels, is the most bullish convergence of forces this market has seen since March 2020. In a market fueled by emotion and noise, we thrive on data and composure. Remember, haste leads to loss, while calm analysis leads to victory. Comment, calm analyst below. Let me see who stayed for the complete macro to price breakdown. And share this with someone who sold during the shakeout without checking the M2 data. Because the liquidity signal that has preceded every crypto bull run in history is flashing green right now. And the people who see it while the market is asleep are the ones who wake up positioned. Like, subscribe, notifications on. I'll see you in the next one. Stay patient, stay rational. And as we always do, we don't wait for the future. We plan for it. Peace.